Thank you for coming. Thank you, guys. My name is Shane Neman. I'm the principal of Neman Ventures. I've founded several SaaS companies, and Neman Ventures invests in a lot of commercial and residential properties. And that's my story, but let's hear about the other panelists. Kitty, would you like to introduce yourself?
Sure. I'm Kitty Sullivan with JLL Spark, which is the strategic venture arm of JLL, and we invest in early stage technologies that are transforming commercial real estate for building owners, operators, and occupiers.
Great, thanks. And Travis?
I'm Travis Connors. I'm the co-founder of Building Ventures. We're an early stage venture firm focused on the entire life cycle of the built environment, so everything from design and construction through operation experience of prop tech.
Thanks. Lindsay?
Yep. Hi, Lindsay Hyde with Modern Ventures. We're a real estate tech fund based in Chicago, investing in companies at the Series A stage, and really interested in companies that are coming from outside of the real estate industry that have technologies that can be transformative to the real estate industry.
Great. Bryan?
Hey, Bryan Lyandvert. I'm an investor here at METAPROP Ventures. We're focused on companies that are innovating in the real estate space across the full value chain. We use our wide network of distribution partners to help these companies reach customers and get pilots and traction.
Great. Mike?
Good morning. I'm Mike Walsh, the founding partner of Structure Capital. We invest in outside of real estate too, but we focus on underutilized assets and excess capacity. So we're in a lot of skills marketplaces and a lot of stuff marketplaces, real estate, jets, boats, anything that we think can be utilized more efficiently. We're in about 140 companies.
Great, thank you guys. So I'm gonna start with the first question. I think the most important question that everybody wants to know is, what investments have you made lately and why? And what does a great deal look like for you?
So, when I think about our portfolio, we've been active for about a year, and there are three themes to the investments we've been making and will continue to make. So the first is we're curating a best-in-breed tech stack for building owners and investors. And so an example of that is Honest Buildings, which is a project management platform for capital and construction projects. The second theme is software plus hardware solutions that leverage AI and machine learning to power analytics and surface insights. And so an example of that in our portfolio is VergeSense, which is a space and occupancy planning tool that uses computer vision sensors to help occupiers optimize their real estate footprints. And the third category or theme is disruptors that are disintermediating or redefining traditional business models. And an example of that is Hubble, which is an online bookings platform for flexible office space based in the UK. And so they're transforming the way businesses begin their journeys of finding space and moving that online.
Great. Anybody else?
Yeah, so we invest broadly across two themes that we think are important transformations in how all this stuff comes together. The first one is an area we call constructuring, this idea that building has to become a lot more like a manufacturing process, and that's deeply informed by data. So the most recent investment is a company called Hypar, which is an open source platform for generative design. The idea being that you start out with a massive amount of friction when you limit your choices by going with an architect to begin with, and how do we just use computational power to be able to generate every building platform that you could have. And the other one is space as a service, right? How do we take all this underutilized infrastructure that we have and drive, increase use of that, and then all the downstream effects. So if you look at when you go to workplace as a service, what are all the other attendant things that are going to be required to enable that don't fit into traditional real estate owner today?
Yeah, so like I said earlier, we really focus on how it is that we bring interesting technology that sits outside of the real estate space into the real estate space. And folks come into the Modern portfolio in two ways. One is through investment, and then the second is through an industry immersion program that we call Passport, which gives us an opportunity to work with a variety of companies and really bring those innovations to our real estate owner and operator partners. So a couple really interesting examples in the current portfolio. We've got actually a company here, Sisu, a data visualization company that's bringing data visualization tools to agents and brokers to really help them understand what their conversion cycles look like and how it is that we can use that data to make more informed decisions. We've also got an AI company in our portfolio that's really interesting called ByteGain that's bringing an AI layer to real estate, both in single-family residential and multifamily residential. And then a company called Sage Green Life that's actually bringing the outdoors inside, so using biophilic design to better inform how we think about office space.
And so we look at companies that are very transformative to the real estate industry. We recently made an investment in a company called Till. It's a company that had a very strong set of operators, people with very experience in the space, really understand both the intersection of fintech as well as real estate. They also had a very clever distribution strategy. As I mentioned before, we're very focused on how we can help with distribution for our portfolio companies, and they're utilizing real estate in a very strategic way to deploy these financial products. And the last thing that we really looked at is that this company was very focused on solving an issue in the affordability crisis that we're having here in the country. And it's something that we care about, not just from a financial perspective, but we really care about, it's something that we deeply care about and want to help alleviate. And so this company had the great intersection of all three of those aspects, and that's why we made that investment.
Great. I'm going to take off of that. One of our things is we focus on values in addition to valuations. So we like to support mission-driven founders, but it's got to be a big market. So, and sometimes they're quite disruptive. I was a seed investor in Uber and in Salesforce, both like hugely disruptive markets, and moved a piece of that into the fund and launched the fund. We're investors in Sonder here, which was interesting to us is, one, it filled a need that I had, which was I've got a couple extra places, and I didn't like them just kind of going to waste. And I met Francis in 2013, and he solved that problem. But great founding teams, like that's one of the, especially after doing this for 6 or 7 years now, it really comes down to the founders, I think, in the end. As I mentioned, the values, the passion. We've got a filter that is really practical. It's simple, but I think it's pretty practical, and it's had us pass on some deals that were good passes. And it's, do we know 1,000, or do we think we know 1,000 people in our social networks that will use the thing? So Sonder is Airbnb meets a hotel, so you get the cool factor of an Airbnb, but the consistency of a hotel. I think most people that I know would prefer to use that than Airbnb. So just really straightforward things. We're in peer space, which is spaces, cool spaces that you can use for events. My family doesn't love it, but I put my house on it. Just lock the bedroom doors, and Twitter, Uber, Pinterest, Airbnb, they've all done events, usually just off-site meetings. So those are, and I'm happy to, I'm sure everyone is, share our filtering criteria for the founders that are looking to get access to that kind of information.
Great, thank you guys. I think another interesting question or some information that the audience might want to know is, you guys probably see 1 million deals come by your desk all the time, new startups, probably later stage companies as well, but what is it that you're seeing too much of, and you're like, oh, that's the same old, and what is it that you think is not being done or not being addressed by startups right now that you think could be something very interesting that you guys would want to potentially invest in? So anybody want to jump in?
I mean, I think, I don't, at least for myself, I'm not really a trendsetter. I am mostly evaluating things that come, which isn't a great answer if you're looking for an idea, but I think that all the good ideas are the ones where someone is just passionate about a specific thing. I'll go back to Travis. He and Garrett at Uber were simply looking to be able to hail black cars because they thought it was cool, like that's it. And then they just drove that with a passionate mission. There are two things that I was looking for when I started the fund, but they've been done. One was a marketplace for RVs, because I have an RV, but I use it for Burning Man only, and otherwise it goes to waste. And then the other was a marketplace to find photographers, videographers, and drone pilots. And a number of people are doing that right now.
Yeah, I can kind of give some of my thoughts here. So one thing that I think that I see quite a lot of is blockchain-enabled marketplaces for buying and selling property without having to even come and visit it. I think these platforms are exciting, but I also think that they're often difficult to differentiate and really sell the value of what blockchain adds to the platform. So it's one of the areas that I would empower founders to really think about what differentiates their platform from several of the other players in the space. In terms of some of the things that I'm really excited about, I would talk to two major areas. The first being machine learning, specifically computer vision. If you think about different players in the real estate space and all the different things that they're doing that require like looking at actual information or assets, and think about the kind of efficiencies that can be gained from doing such a thing. Computer vision really gives the opportunity to increase efficiencies in things like insurance assessment or maintenance and damage assessment, or even things as looking at unstructured data and putting that together in a way that can be translatable and adding value. I think it's one of the areas that has one of the biggest areas of opportunity. And the other is in the construction space. I think construction gives a big opportunity to increase a lot of the inefficiencies in an industry that's been historically one of the most underinvested from a venture perspective of any other. I think one of the things that really stands out to me are marketplaces in construction, things that are for trucking, for materials, for labor, for construction projects themselves. All of these areas have big opportunities for improvements. If you think about trucking, for example, if you think about how much revenue is being generated on construction trucks, it's about $8 billion annually. But if you dive into the numbers a little further, you'll see that the utilization is only around 75%. And so that gives almost a $2 billion opportunity to increase the efficiency and utilize those assets in a better way.
I would say that one of the issues in this space is it's not biotech, right? We're not looking at a lot of deep technical breakthrough. It's about applying technologies and processes that have been around for a long time into a business that's not historically adopted tech to get better productivity and efficiency.
Still analog.
Right, and so there are lots of Me Too things trying to use AR, VR, machine learning to apply. And I think it comes back to what Mike said, which is there are very special founders who understand a problem and create a business model opportunity that leverages those technologies to actually drive the change, right? I think that I certainly believe that autonomous electric vehicles are an inevitability, right? And they've been a potential inevitability for a long time. There's some underlying technologies that help make it possible, but it requires an Elon Musk that forces the entire industry to think differently. The WeWork opportunity has been sitting out in front of real estate forever. It takes Adam Neman to scare the shit out of everybody and have them actually start to go, wow, now we have to have a flex offering, right? Spent 3 years trying to ignore it. Still only 1% of the market, and yet every large owner now has to think about how do I change? And it will permanently eliminate the idea of 7 to 10 year leases.
Yeah. I would think of the question a little differently, which is who are we building innovative products for? And so I'm seeing a lot, just so much innovation that's hubbed in the A market. So if I hear somebody else say in their business model that they're charging $1 a unit a month in multifamily, I will likely tear my hair out. And so where I think the opportunity really is how do we think about innovation in the B and the C markets, where there is still so much white space opportunity and so much hunger to seek yield and to do things better, faster, more cheaply, and the market is so much bigger than the A. And so that's where I would, as founders are thinking about who they're building products for and where they might target their sales cycle, the A is crowded. Think about what's going on in the B and C market and where there might be opportunities there.
Yeah, I'd have to agree with a lot of the kind of overcrowded spaces that were named already, and I would just add to that by saying that if you're addressing that space, it's not as though there's no more innovation needed, of course, but it's more be realistic about the competition you're facing and have a very clear story about what your value proposition is and what makes you differentiated. It's really a pet peeve of mine when I ask about competitors and they're like, well, we really don't have any direct competitors. And I know every business is a snowflake, but it's just very helpful to make it easier for your audience to understand how you fit into the ecosystem. And in terms of technology that excites me personally, I would say it's really exciting to see all of this innovation in clean energy and solutions targeting real estate to help building owners and occupiers reduce their carbon footprints. And obviously we all know that now more than ever, it's so important to be more mindful of our energy consumption.
Thanks, Kitty. So, Mike's, you mentioned that you really look at the founders, and that's a key metric that you're looking at. So I think another interesting question is, what are some other key metrics that you look for in a startup when you're evaluating them, and what turns you on and what turns you off, and that kind of thing?
Yeah, I think a big thing is just is a really well-crafted pitch, whether that is an email or a follow-up conversation or a deck. It's hard to look at anything these days. To your opening point, I probably still get 20 emails unsolicited a day that are pitches of one sort of another. And sometimes I've invested in cold emails. I bet we've invested in 10 companies that came in cold. So unlike a lot of VCs that say we won't invest if it didn't come through a referral, that's not true of us. If it's a good, compelling idea and pitch, then we'll invest. So I think that's just one of the most important things. And then we like to see a little bit of traction. We won't invest just in an idea, but it's so easy to get some traction, a pilot or a couple of pilots these days. And it's easy to build most technology that it's kind of a non-starter without that.
Yeah, and I can piggyback off of that a little bit. One thing I really like to look for is growth of the customer base of particular startups. I'm particularly excited about companies that are showing growth in both new customers, so they're constantly acquiring new logos and growing in that way. But they're also growing within those customers. They're expanding their pilots within those customers. They're getting full deployments. The customers within those logos are ecstatic and selling it to other parts of their organization. And building on top of that, I also really like to see companies that are expanding the scope of their customers. If they're selling to different types of customers or different regions, or in some way broadening the types of customers that they're selling to, I think that's a really good sign that your company can scale. And anything you can do to achieve the mix of these three factors, I think really bodes well for kind of the growth trajectory that your company's facing.
Yeah. That's a really good point. That just happened with us. We're in a company that recovers food that would be thrown away, and they get it to hungry people, and they license it as a platform, and the company gets a tax benefit so that there's a nice ROI to it. And they're really going after restaurants, corporate cafeterias, stadiums, and they just got into the hospital industry, and had a huge, they're raising money, they're raising another round, and it just had a huge positive impact for a couple of investors that saw it go from one vertical to another.
I completely agree with Bryan's points. What I'd add to that is we also look for the TAM. So how much should we care about this opportunity? Can you really clearly articulate the magnitude of it in dollars? And where I don't tend to focus as much or care about certain metrics are pipelines and forecasts. And so founders are often very proud of those things, but I kind of care more about the have you been walking the walk so far?
Yeah, I sat as a founder for much, much longer than I've been on this side of the table. And so what I often think about is what is the founder's ability to build a team of champions around them, whether that's advisors or paid team members, and extend their own span of control beyond just themselves. So we're investing at the A. So we're investing typically in companies that are doing a good amount of revenue, and it's so critical to scale for founders to be able to get out of their own way and build that team around them. That's one of the kind of key attributes that I look for.
Yeah, we have a fairly simple approach, which is we're pretty obsessed with founder market fit. Why is this founder, loves their problem enough that they will survive or she will survive getting through the vagaries of what the product needs to be? Our LP base and our network all comes from people from across the industry, so we can help an awful lot with the refining of the idea and the value proposition. But you need to have people who can push all the way through. And then, so for us, it's, all right, that's one piece. Now the other one, what has to be true for this to be a $100 million revenue business? Do we believe that can be the case? And if those things, work, then it's a pretty easy decision.
And I think the way that you phrased that is so key for founders is it's not about loving the wins, right? Like the wins are easy to love. It's about really loving the problems. And if you can love the problems as a founder, you'll figure the rest of it out. But it is really about having passion around the hard times and those challenges in your business.
And one other thing I would add is having an incomplete team is a tough thing to invest in. We're at seed stage, so that's super early. You need a COO and a president, but someone who's really handling sales, someone who's out there pushing the vision, someone who's doing the partnerships, if that's a relevant thing. Obviously, engineering, but it's tough to invest in an incomplete team, I guess is the point.
So with that said, I think what might be helpful for some of the startups is if there's one absolute thing that is a deal breaker for you when you get that cold pitch, right? What is that? So those startups don't do that, and so they can learn from that.
For me, we researched all these ideas and we decided this was a good one. Drives me crazy, right? They don't come naturally from understanding, like, I've lived with this problem, I've wrestled with this problem, I believe I know what the solution to this problem is.
Got it.
Yeah, I really like to see people who have been out actually testing in the field, even if the idea is really early, because we have companies that come into Passport very, very early. But you've got to get beyond just building, especially in technology, right? Don't build anything until you've got it in the hands of customers and actually understand the use case. That's my pet peeve.
Or even if they do it manually to
right,
start with.
Do it however you do it. Draw it on a whiteboard, whatever it is, but just get it in the hands of some users so you're actually building something that you know how people will use it. And so often, we see founders who have a great idea with a technology that they've built that nobody is ever going to use.
I'd say I have two pet peeves. One deal breaker is really if the entrepreneurs clearly haven't done their research and understood the scope of what we invest in. So if they're pitching me something for single family home residential, A, that's out of scope, but B, it also tells me that they haven't even taken the step to understand what we focus on. And then B, I'd say this is more of a turnoff than a complete deal breaker, but I'm always hyper skeptical when the team has outsourced the product development to a third party, and they're kind of just, they're very focused on commercialization, and the product itself is an afterthought to them.
Yeah, and to me, one of the things that really stands out to me is when a startup comes to me and shows that even one of their core competencies, whether it's engineering or whether it's sales or whether it's customer success, if they've outsourced or otherwise shown that they haven't fully thought about that aspect of their business, I think that's a big red flag for me. I think a company should have a clear understanding of what are their core competencies and what parts of the business they should or can outsource. And I think that balance is what really makes or breaks teams in the early stage, because they're often not able to develop the pieces that really differentiate themselves.
I think Kitty said it in the beginning that when a competition slide isn't included, that's a huge red flag to me. Or when it's included, but the company is unrealistic about it. If I know it's more of a competitor than is conveyed, I have a problem with that because it's either lack of research or an unwillingness to present that there is a competitor, a pretty close competitor. And the other thing, which is not, when I was a founder, I was told to do exactly what I don't like, so this might be unique to me, but I remember listening to VCs say, just try to build a relationship, you're not necessarily looking for money, suggest that you're just looking for feedback. I can't stand when I get an email that says, I'm just looking for feedback. I don't have time to get feedback. I'm either going to make an investment or I'm not. So, but again, that might just
That's a good point.
That might be me. I'm not sure.
No,
And it's the
second
fault
that.
of the VCs. It's the fault of the industry.
Yeah.
So we're in Miami, and we have a very large international community here. With that said, do you guys invest outside of the U.S., and what are your thoughts on companies that are doing well outside of the U.S. and startups there?
Yeah, so we invest globally, just due to the nature of where we're located in New York and where a lot of our partners are based. The majority of our investments are in the U.S., but that said, we have made several international investments. And there's a couple areas internationally that I'm really excited about, particularly in industries that typically have asset-heavy utilization of real estate, and the opportunities to find new ways to take those spaces and make them shared spaces. Things like warehousing, things like hospitals and clinics, things like restaurants and kitchens. If you take the restaurant and kitchens example, as an example, and you think about the amount of inefficiency there is in a typical restaurant. If you think about the average fast food restaurant, 75% of that space is being dedicated to the front of the house, the seating, the checkout, and things like that. While 90% of the customers that are coming through are taking takeout or delivery. So there's this massive mismatch in where a lot of the resources are being allocated in the industry. And so there's a big opportunity to turn those into shared kitchens, which is something that Travis Kalanick and several others, Kitchen United, several other places are bringing to the U.S. But in China, in particular, in India, it's very prevalent, where oftentimes it's actually cheaper to get delivery than it is to go pick up the food yourself, because they've eliminated so much of the cost there.
Sorry, just for the audience, we'll be taking questions soon, and we're doing it through the app. So if you haven't already, you should download the app if you have some questions. But please go ahead.
Yeah, so we have not made any investments outside the U.S. yet. We're not prohibited from doing so. Some of it's just the stage that we tend to invest. It's easier to deploy the network that we have to help in building a team, and finding early customers is easier when it's close. But
Yes, similarly, we have not yet made an investment outside the U.S., but we're seeing increasingly, particularly in the multifamily space, there's so much globalization and so much really interesting development in multifamily happening in the UK and in Mexico. And so we are starting to have those conversations. I anticipate we'll probably do something fairly soon.
Yep. Yeah, we've made a couple of investments internationally as well. Our scope is global, just like JLL's, and we're essentially agnostic to geography, although time zones can kind of create a little friction. But overall, we have essentially the same investment criteria across the board.
Great. We only have about a minute left, so I'm going to have a quick question for you guys. Why should if a startup's good and they're getting multiple VC offers, why should they pick your VC versus someone else? Another one, I mean.
Well, I can go first.
Okay.
So JLL Spark's core differentiator is that we invest strategically on behalf of JLL. They're our sole LP, and we have a dedicated growth team whose mandate is to accelerate the success of our portfolio companies by leveraging JLL distribution channels and relationships. So in our diligence process, we really focus heavily on ensuring that we can provide value to that startup above and beyond simply capital.
Great.
So we've been investors in construction real estate tech probably longer than anybody. the firm that we spun out of started in 2002. So we've been observing and investing in space for a long time. And so our LP base and network all comes from across the industry of large construction, large real estate firms, and the executives are in them to help those companies grow and scale.
Great. We got one more quick one.
Yeah, so we're really focused similarly on deploying our LP network and our partner network to help our companies gain a competitive advantage in terms of early clients and distribution. And I would say the reality, though, is all of these funds, we all work together. And so the better approach would probably be to say, how can I bring together a syndicate and collaborate across all these different networks, because they are not overlapping and highly
And just
comparable.
to add to that, we've got a lot of companies raising later stage rounds right now, and there are VCs that want to take the whole thing, and I just don't get it. Like I personally, as a founder, wouldn't work with that VC, because you want more good, smart people around the table that have huge networks. So that's just a caution, I guess.
Great. Yep. Thank you so much. With that said, if there are any questions, now is the time to use your app to send them to us.
Can I just make one more point, though, on that?
Of course.
Which is, as founders, also just know that all your VCs are likely talking to each other as well. And so we've had founders tank their own deals occasionally by making comments that were false about what other VCs are doing. So just be mindful about the fact that the network is small and highly connected.
That's a great
Yeah,
point.
it's a small world,
Yeah.
for sure.
Yeah, there are probably 20 firms focused around specifically prop tech, right? And we're all relatively small in size. And so one of the very first things I do when I meet an industry company is tell Lindsay about it, talk to METAPROP. Like the great news is in this space, you're going to get a syndicate of folks that have networks that are all complementary. But it is really important to realize you can't game the system in that way.
All right, so we do have a question. As a parking startup founder, how do you feel about the underutilization of parking spaces and the lack of access? So,
I've looked at a couple. We haven't gotten there yet. I probably know who that came from. I think I met you last night. But I think it's interesting, and you have to make the numbers work. There are a couple of companies. I think it was called Lux in San Francisco. That was amazing for the consumer. I'd take my car to my office, drop it off, they would take it, and then I'd have a couple cocktails and have them drop it off at the house for like $20, including the entire day. But the numbers just didn't work. So you got to show that the numbers work. And I mean, you look at Uber's getting crushed this week, and I'm confident that they will hit profitability, but eventually you got to make the numbers work. So I haven't seen them paper out in the parking companies I've seen.
Yeah, I'm much more excited about the potential around utilization of parking and the change in that. I don't know if it's true or not, but the stat that I've heard repeatedly is that the amount of surface parking in LA is equal to all of the space in Manhattan. Right? Parking is probably not the highest and best use of that land.
well, as more ride sharing comes, do you think that that's going to diminish?
Yeah, I think between ride sharing,
Autonomy.
shared vehicle option, autonomy, I think there are a lot of solutions that are closer than people expect that will dramatically change the way the landscape of personal car ownership.
Okay. How do you see the marketing technology segment in prop tech and the importance of it for multifamily real estate?
Yeah, so we're really, as I said, we've got a really interesting company in our portfolio that's utilizing AI to help improve marketing outcomes. It's a highly competitive space. There's a lot of different marketing solutions for multifamily, and so I think the question again to this competition piece is, what are you doing that is remarkably different from what everybody else is doing, both to be able to get the attention of multifamily owners and operators, and to be able to get the attention of the consumer. So we've started to see some really interesting peer-to-peer companies that are offering peer-to-peer referrals and peer-to-peer 24-hour touring. That, in my view, is a really different way to think about how do you market a multifamily property. But if you're coming into the marketing segment specifically, I think you're either leveraging massive amounts of data and artificial intelligence to do some very unique and interesting things, or you are throwing out old models and thinking dramatically different about how it is that you use real people to form real connections and leverage the power that has to make a difference.
Great. Anybody else?
Yeah, just to add to that, yeah, it's a very crowded space, and so you really need to have, especially since they're often targeting the brokerages themselves or the realtors, to have a clear ROI story of how much will this be saving you in terms of time and money or kind of incremental gains from closing deals. And you know, again, like what makes you different and why now? And you know, sometimes I'll see it's just kind of like a generic marketing solution that doesn't really feel purpose-built for prop tech. And it's not necessarily that it has to be purpose-built, but why are you talking to me as a commercial real estate investor, and what makes this different from the other 10 I've seen?
Yeah, we wouldn't be on a real estate panel if we weren't talking about where we're at in the cycle. And so, you know, the marketing solutions that you build when multifamily is at 90% occupied are different than what you might be thinking about building when we either have oversupply in markets or when the cycle starts to turn, and maybe we're looking at rent rate compression and occupancy expansion. And so just be sure you've got a clear story for investors about how your business works on both sides of the cycle.
Okay, and so one question that came in is about climate change, and is sustainability the top priority of your fund since all risk is affected by climate change? That's a really interesting question, actually.
Yeah, so we focus a lot on sustainability. We have a portfolio company called Measurable. Measurable's aim is to try and create a sustainability score for every building that exists in the world. Company's doing very well. They're about 6 billion square feet that they cover today. And in fact, we're bringing together all the people in our network to meet in Salesforce Tower next month to have a discussion of, you know, what is the responsibility of the architecture, engineering, construction, real estate industries to push forward on getting that. Because we believe it's moved past the marketing of LEED and GRESB and getting a plaque, and to having owners actually care about the footprint that they're in and are trying to drive that message. And in the last round that Measurable did, S&P became one of the investors because they're getting more demand from the financial class who wants to understand the sustainability profile of the assets they're investing in.
Yeah, and just to piggyback off that, I think one of the more interesting stats that I've seen is that about half the buildings that will exist by 2050 haven't been built yet. And so I think there's a big opportunity for people to think about sustainable development in a way that takes advantage of new building materials to make those buildings more eco-friendly, as well as think about them from an insurance or a safety perspective, where you want to build in regions or build technologies that allow regions that may be affected by climate change or aggregate weather. You want to make sure that you're thinking about solutions that help solve problems that may exist in the next 20 or 30 years that may not exist today.
Got it. Anybody want to add to that? Or? Okay, I'll go on to the next question. Okay, this is a good one. Assuming you're being pitched by a company that you're very interested in, how should a founder act in the pitch from a sales perspective to close the deal?
So this is I came originally to venture from having run a hedge fund, right? And hedge fund has been a very transactional deal, and it's very easy to get in and out, right? And one of the eye-opening things to me early in my days in venture was this notion of it isn't about the deal in the beginning, it's about how long you're going to be in this relationship with these people. So from the get-go, you need to be really transparent and honest about where the strengths are of the team, of the product, where you really are with your market, because you are engaging in, our average holding period in companies is 8 or 9 years at this point. So there's nothing worse than the second board meeting where you discover, here are all the things we didn't actually tell you are the problems early on.
Yeah, it's like family, basically.
Yeah.
Well, and it's also, the process is kind of like, like dating, where it's your first meeting is kind of like a first date, and you're really just getting to know one another and seeing if there's a mutual fit. And so no matter how much I might be interested in the company, it's not as though you can close the deal in one meeting, but also it's kind of a turnoff if either party feels really salesy, and it almost kind of gives an air of desperation if you're really pitching hard. So I think it's just more important to be authentic and transparent as much as possible and see where it goes from there.
Yeah, And in terms of advice that might be a little bit more actionable, the way that I think about relationships like that is I need to understand what the clear next step for me is in terms of how I can be helpful to this company, not only to help them get to the next round, but how I can help them get to an exit or even further. So I want to really understand what my relationship is going to unfold like, and if we can have a frank discussion about how that will unfold and how I can be helpful and how I will grow with your firm, then that's something that I'm really excited about.
And I would add to that to say, the more that founders can do their homework and paint that vision as a part of the discussion, the better, right? So, before you walk in the room, you should have had conversations with other founders in the portfolio. You should really understand what the strengths and weaknesses are of any given fund, who the funds team is, and be able to say, I really think that we are a right match because you guys work consistently with X firm and we're trying to get in there, and that's one of our biggest potential customer bases. Having a real sense of clarity around what the investor can do for you, I find very helpful.
Yeah.
Just to add, most of my career has been in sales, and engineering background, but really I sold software for 15 years or something. I'm totally fine, and I prefer people to, build a relationship, come in prepared, but I have no problem. In fact, I encourage founders to ask the next steps. Can we do this together? Just ask for the order. And then I think one thing that does is it gets all the next steps out there in that one meeting. I'd rather not have a follow-up just to figure out what the follow-up is. And I'd say we've funded 25% of our companies within a week of meeting them. Just some really quick diligence. We love the founders. They might come back again. Usually they meet with, we're a small team, there are only 3 of us, so they meet with all of us the first time, and we can make really fast decisions, which is probably why we're in 140 or 50 companies.
Yeah, and one thing I'll say is that these relationships carry on past funding, and even if a deal doesn't make sense to make at that time, we've revisited a number of deals as they've gotten more traction, as we've learned more about the companies. And so I would make sure to be mindful of keeping that relationship going in the future, even if it doesn't make sense right now.
Yeah, and definitely, no one in here would do it, but definitely don't lie. We've got founders, not many, but a small subset of founders. They're, Series A, Series B, they're just sending us bad information, and that's a way to destroy your actual career, never mind your company and your deal, but that's it. It's over for those people.
We're unfortunately out of time now, but thank you all for being here. We really appreciate it, and thanks for the great questions.
Yeah.
Thank you.
Thank you.
Round of applause, guys, for the great panel. Great job, guys.